All right. This is my trade recap for December 31st, 2025. Last trading day of the year. So, let's get into it. Market opened up, or I guess before the market opened up, I determined my bias. Looking at the daily, we we're at all-time highs on the S&P 500, but we had the last couple days made a move down, and same with NQ. We weren't at all-time highs, so that's right here. But when we swept this, this daily for value gap here. We moved into that, and we were reacting off of it. So on lower time frames, we were in a downtrend on both assets. So I was kind of thinking about shorts, but I wasn't set on shorts. I was kind of had a neutral bias before the market opened up. I could have seen price running all this liquidity here. And we also had a daily internal low on both assets that wasn't hit at the before market opened up, and I was able to see a scenario playing out where we moved lower and took that out, which we did. And this is what I even wrote in my bias right here. Bias for the day will be determined on what the chart looks like at 10 a.m. Eastern Standard Time. The reason for this is because when the market opened up, we were 9:30 right here. This is the exact price that market opened up at, right here. And so we were trading through this 4-hour gap here. You can see that we just wicked through it and respected it. I think I worded that wrong in my bias, but I got the point. This was a bearish 4-hour gap, and if we had have closed through this gap, then we would have disrespected it, and I would have wanted to see price move up to this 4-hour, and on NQ up to this 1-hour internal high or intermediate high. But we closed below it, respecting it, and that was my indication that we were going to continue to move lower. There was this SMT here, but by the time I was looking to take this trade, we had a lot of displacement from this 4-hour gap, and I didn't see why we wouldn't take out this daily intermediate low. So that was my thought process going into the bias of shorting the market. So when the market opened up, we immediately sold off pretty aggressively. And like I said, I wanted to wait until 10 a.m. Eastern Standard Time to see where price closed, because that is the beginning of the new 4-hour candle. So this 4-hour candle here, this one here, was a 6 a.m. until 10 a.m. Eastern Standard Time. So I wanted to see where price would close, and this was the price that we closed at here, respecting this gap. And so when price closed at 10 a.m., I was willing to take a short position because, like I said, price closed below, and that was an indication to me for price to continue moving lower. So we had these, from this displacement, we had 5-minute gaps that were opened up, and I wanted to see equilibrium of the range get balanced. So price opened here at 9:30, and our range would have been from the 9:30 high down to this price. Here to this price here. So what I'd be looking to see would be equilibrium get balanced, and I wanted to see get traded up to this point right here at 0.5, which is equilibrium of this range. So we perfectly respected equilibrium and continued moving lower, and at the same time of hitting equilibrium of this range, we traded into this 5-minute gap right here. Oops. On both assets, NQ and ES. So we traded into there. Can delete these 1 hour gaps. I had these open before 10 a.m. to see if that's where price was going to react and move higher. So those price traded back to equilibrium of the range into this 5-minute gap. And so the only thing that I needed to see after that to enter the short position was the highest time frame inversion between 30 seconds and 5 minutes. And so if you look at the 1 minute here, you can see that there was this small gap here, and then you go up to the 2 minute, check that out to see what is the if there's any gaps there, which there was. So then I go up to the 3 minute. There's a very small gap here between this candle and this candle. Go up to the 4 minute, and there's no gap on the 4 minute. So the highest time frame inversion would have been the 3 minute. And so we got this close right here, and this candle also closed through the 2 minute, so that was even more indication for me that we were going to be going lower. So the 2 minute closed first at 10:02, but then I waited until this candle at 10:03 closed, and I entered immediately here, as you can see. So I entered there with 2 contracts, risking about $700 to make $800, just over $800 on each account. I was trading 2 accounts here. So I took this on ES, by the way, instead of NQ. And the reason for that is because on ES we were closer to the daily intermediate low than we were on NQ. So you can see here at 10:18 we took this daily intermediate low on ES, and at 10:18 on NQ we were still trading above it. So it did eventually hit, but I wanted to take the trade on the asset that was going to hit it first, because when we took this, there was an SMT that was formed at this low, and that sent price higher. I was worried it would send price higher to move higher to rebalance even further into this range, but we did end up eventually taking it out on NQ. So that's why I took it on ES. So yeah, we got the 3 minute inversion, and I was going break even at the internal low of this range. So right there at 10:09, that's when I moved my stop down to break even. So it was a risk-free trade. If it went against me, then I would have been out of the trade for $0. But price stayed below this point and eventually took profit here, targeting this daily intermediate low. And that's exactly what I wrote in my bias for an ideal setup for shorts. Where does it say? Ideal scenario. The ideal scenario for shorts would be to see the 4 hour get disrespected, which it did. While price holds the daily intermediate low, we still didn't trade past that before I entered the trade, so it was still intact. And have a setup down towards this level, given that the risk to reward is optimal. And for that, to me, that meant that it just needed to be more than 1-to-1 risk to reward ratio, which it was. It was 1.26. You can see here, and that was pretty much it. You can see the profits here, $16.79 between the 2 accounts, and yeah, that was probably the best trade that I seen all December. Price was obviously showing where it wanted to go, disrespecting this 4-hour gap. We sold off aggressively, perfectly rebalanced this range when we traded back to the 5-minute, and then we had a 3-minute inversion out of the range down to this daily intermediate low. What also made it A+ to me was the fact that our break-even price was fairly far away from the entry price. Sometimes the way the market plays out, the break-even price will be pretty close to the entry, and I get break-even extremely fast and get stopped out at break-even extremely fast because price has no room to buffer on the way down to the target that I had in mind. So this was probably the most A+ setup that I've seen all December. That is the last trade recap of the year.